With markets rebounding, we can expect 2014 to go out with a bang, with more M&A and IPOs on the horizon. I'm Jamie Mason, speaking here today with the Deal's senior editor, John Marino. So John, lately markets have been rebounding, and that has coincided with a rise in M&A. What are some of the other factors?
I think going forward, one of the things that we're going to be seeing is going to be activism, and a lot more of it. Obviously, the rising markets help, but there are hedge funds out there. They've raised record amounts of cash, and now some of them are looking at tech companies out west where they either want to bully the board around, push for change, or just push for outright divestitures. And I think that HP's breakup was probably a reflexive move and them getting out in front of activist investors rather than actually being besieged by them.
And what can we expect from the IPO market?
From the IPO market, we can expect a lot more activity, not just this year, but early next year as well. So we already had a couple of companies. New Relic is one, it's a tech company. Hortonworks is another one, it's a software as a service firm. They're both likely to IPO before the end of the year, last couple of weeks of December maybe. They already put their paperwork in the beginning of November. Gives them a little bit of time to get ready. Going forward, we're going to see Juno Therapeutics. They filed today for an IPO, possibly even an Uber or an Airbnb going forward. These are all companies that have a ton of venture money behind them. People need to exit, and this is a market that you want to exit into.
So there's a lot to watch for this year. What about 2015?
2015, I think, really might be a big year. For one, it will probably showcase the Yahoo-AOL merger if and when they do decide to go forward with that deal. I've spoken with a number of people who make a very good argument for why it should happen. But elsewhere out there, private equity has now record cash on hand, and we're finally getting to a point where rates may start to rise. It's cheap money, but only for so long. So you're going to start to see some PE firms put some cash to use, maybe even take on a little bit more risk in the new year.
Great. Well, thank you so much, John. For The Deal, I'm Jamie Mason, speaking with Jonathan Marino. Thank you for watching.